Hello, this is Kendall. Kendall Capital. It's January 2022. I want to share with you what we're thinking for the financial markets in 2022. But before I share where we're going, I'd like to share where we've been in the past. 2019, 20, and 21 were three great years for the equity markets. The markets were up 15 to 20% each one of those 3 years. 2022, the economy is expected to continue to grow quite strong. GDP is expected to grow 3.5% to 4%. Unemployment's only at 4%. Major analysts expect corporate earnings to grow 8 to 10% this year. Everything seems to be going quite well. Yet when we look in the rearview mirror, we know that what fueled the equity market's performance has been the fact that the Federal Reserve cut interest rates over the last 3 years. They did this to basically support the economy during the COVID crisis. Up until most recently, Jerome Powell called inflation what we had was just transitory. But now we have CPI index over 6%. He refers to inflation now as embedded in our economy and needs to be managed. He has stated to Congress and to the financial markets that he plans on raising interest rates this year as much as 3 or 4 times. As interest rates go up, quite frankly, all things being equal, stocks and bonds will come down in value. So how do we manage this in today's market? I think more so than ever, we got to be careful of what I call the financial landmines. And the financial landmines is basically make sure we don't own long maturity, 20 and 30 year bonds, because when interest rates go up, those will come down dramatically in value. Just like the fixed income market on the equity market side, be careful of the valuations that you own companies for. And I talked about this a lot last year. I call them the COVID success stocks, and they were trading at huge valuations. We saw Zoom and Peloton and Netflix trade at absurd, lack of a better term, absurd valuations. And quite frankly, I'm proud we stayed away from that, because many of those stocks are down 30, 40, 50%. Where do we invest in the markets in today's market? For 2022, people who do need money short term, we still own short-term maturities, things that might mature in a year or two, to have the money available when they need it. And on the equity side, we continue to pay particular close attention to valuations. Make sure we own companies trading at reasonable price to earnings, price to cash flow, good dividend yields. It will be a balancing act as interest rates go up. Will the economy, can corporate America continue to grow? I think this year will be a more difficult year than the past 3 years, but we're here to manage through it, because we manage for not just 6 months out, we manage for 3, 5, and 10 years to meet your financial needs. So as always, I welcome the telephone conversations, the annual meetings, the opportunity to visit with you. So please don't hesitate to call myself, Carol, Brian, Jason, or Zebin. We're here to serve you with any concerns you might have.